Welcome to Investors Insight, where today's topic is trends. We continue to get a lot of questions regarding the upcoming midterm election and how it will impact the market, which is not surprising considering we are really a week away. But before I give an update on the midterm, Trey, give an update on another common topic we are asked about in almost every single meeting and conversations we have with clients, and that is inflation.
Yeah, absolutely. Thanks, Bobby. So, the recent inflation data has definitely been negative, and we've individuals are definitely feeling the pinch at the pump and at the grocery store. And inflation has risen at a fairly fast pace historically. One of our research partners provided a chart that I think is helpful in showing that while the ride up has been painful, there's some belief that the steeper the ride up, traditionally that means the steeper to fall down. You can see that inflation is very symmetrical. This chart shows inflation period in 1951, 74, 90, 70, 80, and 2008, where inflation rose. You can see that the pitch at which it rises looks a whole lot like the pitch at which it falls. And so while this ride up has been painful, considering how severe it's been, that does indicate that that we could see a similar downslope on the other side. And there's a lot of indicators that we peaked inflation back in June at 9%. So we could be already over the worst of it and could see some good news coming down the pipe.
So let's talk about the midterm election, and we will share with everyone what our research firms are saying. And please keep in mind that we only care about politics and how it relates to the market. And according to the most recent poll I predicted that you can see in this chart, Republicans have increased their chances of taking control of not only the House, but also the Senate. So we want to look at another chart that shows what that means for the market. Again, we only care about politics and how it relates to the market. So looking at the current polling and historical performance of the market going back to 1933, if the Republicans actually take control of Congress, that would be the third best scenario for market performance. As you can see in this chart, the middle column there. A lot can happen in the next week, and polling can obviously be wrong, but we're watching carefully to see how it would impact the markets. So obviously a very important topic this time of year. So we did want to address that. But Ty, talk about money supply. Again, money supply does impact inflation. Talk about that for a second.
Yeah. So, I mean, if you've watched our blogs before, you know that every month I try to come on here and talk about money supply. It was a big deal during COVID. 2020, 2021, we saw a 40% increase in the money supply. That's led to all this inflation. One of my favorite charts shows that when money supply has CPI or inflation has a 13th month lag to the chart of money supply. So as money supply is going up, 13 months later, inflation came up. Well, now we just had a pretty astonishing number in September. Money supply decreased by 0.6%. That's the largest decrease in money supply since 1959. We're not printing money right now. It's a good sign for inflation to come down, as Trey alluded to, hopefully quickly, as this chart showed. So money supply coming down rapidly. Hopefully that'll translate to inflation here in the next 6 months and 13 months. And hopefully a year from now, we're talking about inflation much lower than where it is today.
Yeah, and so it's going to be a really busy next couple of days, especially as we get closer to next Tuesday with the election. So if you have any questions about what you're seeing, any questions about the markets or inflation, please reach out to us. We want to answer all the questions. Thanks for watching, and we'll see you next week. Thanks.